Hello everybody, it is Will Hassel once again for a edition of my Sunday night watch list of the week ahead, and I am going to start off this week ahead's watch list with a review of the previous week, which I think I will start doing more often because I just feel like it gets a good sense of what happened last week and start into this week. So I've got three charts right here. I've got the Dow Jones Industrial Average, NASDAQ 100, and S&P 500 ETFs all here because we are going to review more of a macro sense at the start. To go through the previous week, we had a very interesting week on Wall Street, and I think it was mainly from Wednesday to Friday. Thursday, we had the Twitter IPO. That was really exciting because big, massive IPO, obviously. And then we also had the ECB surprise rate cut from their bank lending rate. Was originally 0.5%, and they cut it down to 0.25%. That was a surprise cut. Really, no one was expecting that. So, as you can see here, Thursday, the market opened initially higher and then just started to really took a heavy toll down because a lot of this is the Dow Jones. So you can see the 21-day crossed the 50 and it just went downhill. The 50 crossed the 200-day right here. Took a downhill spell because a lot of people were thinking, the ECB may. Oh, by the way, on that day we also had a very good beat in U.S. GDP for the third quarter. We were expected to grow only 2%, but instead we grew 2.8%. I was extremely happy about this number. I even was in the Leaders Investment Club Skype chat talking about it as the numbers came out to my friend Julian Marquez, and we were just sitting there in awe watching the futures drop as we saw the ECB cut rates, and that initially had an uplifting effect on the European markets and subsequently the U.S. futures. And then, the U.S. euro dollar was going all over the place. And then we started talking because we saw the futures starting to tank because people thought, okay, we've got good growth, so that means the Fed's going to taper sooner. And then that just got everyone started selling, and that's what me and Julian were talking about, was this is crazy. We have amazing data right now. We beat the GDP forecast by almost a full %, yet the markets were tanking. As you can see in the NASDAQ got hit really hard at that opening. Pretty much everything crossed below the 200-day moving average, and we didn't get back up above that 200-day moving average until the very close of Friday. Look at the S&P real fast. Here's that Thursday drop. As you could see, almost every single market recovered on Friday. On Friday, we had the incredible jobless beat of the street was expecting 120,000 jobs, but instead we delivered with an over 200,000 job claim, which was a miraculous beat. As you can see, the entire markets were jumping. There's the S&P climbed above that 200-day moving average, finished way up. Dow closed at a new all-time high, set a new record. It's Friday once again, and then the NASDAQ recovered a lot of its losses, a fair amount of its losses there. So that was the macro week. I really do think now, since the whole big rally on Friday was people realizing, maybe we aren't as bad off. Maybe Fed tapering is actually a good thing because now we're pretty much expecting it. To go into this next week for economic data, on Thursday we have jobless claims. The previous was jobless claims of 348,000, and I didn't really see any consensus on what it might be. I have the feeling as we get closer to the number, more consensus will come out. And then we also have it's September third quarter production. And the estimate is 1.4%. So that's the estimate. The last period we had 2.3%. So there you go for Thursday, and then for Friday we have October import prices. The consensus is negative 0.3%. October industrial production, that's the consensus is actually flat. October capacity utilization, which is 78.2%, and then finally September wholesale inventories, which is the consensus is at negative 0.1%. And I think the biggest things that you need to watch for are the production, jobless claims, for Friday, October import prices, and September whole inventories are the things that you're going to want to watch for right there. Just checking on my time. Okay, so markets aside, the broader markets aside, let's go back to some of my positions. I'm going to put up cores. AIG, as you guys know, NASDAQ, QQQ is one of my positions. So I already went over that. And we're going to go into Starbucks. Okay, so pretty interesting. Michael Kors beat on earnings, which I was excited for. Huge, massive beat, actually. And it held out, as you can see, down into earnings, popped on that great earnings beat because Michael Kors has found this amazing spot of, even though they are a high-end retailer, they are able to go and sell a whole lot of products, which a lot of people don't understand is because they target accessories massively. And I have to say, at my school, I did notice a lot of girls started wearing Michael Kors boots as we're getting into colder season. A lot of Michael Kors belts, little bracelets, little wristlet wallets. My sister, for her birthday, got a Michael Kors purse, and she got a little Michael Kors wristlet. It's these little things that really add up, and that's what proved for Michael Kors. So we had just a great day. It's way over that 200-day moving average, tucked a little bit below on Thursday because of the broader market. And then Friday, it's going to start using that, as we can see right here on that little line right here, 78 and 94. That's where the 200 days is going to start offering support right through there. And it did. It bounced right off there and closed at 79.40. I'd say get into this name. Really get into this name. Right now, as the closes, it's just a little bit under the 50-day moving average, which will offer some resistance. So we have a little bit of a trading range of 79.45 and that 78.90 range. So a little bit of a trading range. A little bit of a trading range right there. I still say get into it. The earnings were monstrous. I can definitely see this thing going to 85 in no time. And I am actually expecting it to. AIG had a rough week last week, as I explained, and really didn't do a whole lot this week. It stayed pretty much down pretty much the entire week, and then just kind of popped up on Friday. I have this one as I wouldn't put any more capital to work into it currently, just based on how it's been trading this last week. I really want to break 49 and stay above it for a couple days before really putting more capital to work. As we can see, 49 seems to be that mental number. On Monday, we saw it traded up above 49, then it crossed under, then it crossed over. Used that into the start trading on Tuesday, then went down and hasn't really gone up there since. So yeah, it's coming up right underneath its 50-day moving average. So a break right there would be very good, and hopefully we'll get up to that 49 level and close there for a couple days. Ooh, as we can see on Friday, it just almost got up to that 49 range. Going into Starbucks after that nice beat last weekend on its earnings. Had a fairly roller coaster day, much like the roller coaster week, much like the NASDAQ. Ended up for the week, closed at $81.20 above its 50-day moving average. So far, that's been the only stock that I've highlighted that's above its 50-day moving average at the close on Friday. Had a high of the week, an all-time high of 82.50. it's been really a good moneymaker. I haven't really had not. I still say put a little bit more capital to work into it just because the earnings were really good. If you didn't take advantage of that little earnings drop that we had, I'd say wait for it to go down a bit. Thursday would have been a good time to enter because this name is only going to grow larger because they're starting their entire Tivana branch and they're just going to skyrocket here over the next couple of years. Next name is JP Morgan. As we can see, once again, this name has just been flat in those trading ranges. And as I highlighted a couple of my other videos, it's been that $52 mark has been a real mental number for any JP Morgan traders and investors. We've been going up and down there for the last, let's take a longer look at the last 9 days. It's just been up and down, this kind of 50, 53, 52, just all up in there for the last trading days because the news hasn't been that good for them up until Friday, as we see that monstrous move blew past every single moving average. It's above the 50. 50's not even really close to it. 200's not even close to it. So I'm gonna expect some profit taken on Monday, but it's that whole. I think it really was that drop was because it was a Dow stock, so of course it went up with the Dow. But I think it's that news that we are maybe getting out of this whole kind of recession that we've got going on. And then last but not least, Fannie Mae. If you guys who have seen my videos before remember that I have been all over this name for a while now. It's coming up on pretty much 2 months since I've entered it, and if we pop up my position so far, I have made total of almost 30% or $185. Now I have taken some profits at around, if I don't remember the exact number, it was around $6.70. I want to say $6.80, somewhere around there. I remember, you can take a look at my other videos for when I got out of about 40 shares, I think it was, because I got over $100. I had earned over $100, so I want to take some of that off the table. And then it was actually earlier this week that I added to it. Nope, actually, last week, if you were in my video, I said I got in at $7 at 40 shares. I put it back to work, and it made a big difference this week. It really did. New all-time high for the preferred because they came out with really strong earnings. It seems like they paid a lot of money to the government. It seems like Fannie Mae may be independent from the government here in a little bit. Here is a chart for the common shares. As we can see, not closed actually lower on the week than it did. I've been seeing a lot of people on StockTwits on Twitter talking about how they are really just upset on how the common shares has been performing compared to the preferred. It seems like there's a lot more price action in the preferred, and it's because, to be quite frank, there is. I've been seeing a whole lot of big prints going over the time and sales data. Hedge funds are all over this, or have been all over this. That's one of the reasons why I got into it, is I saw the case made for Fannie Mae preferred on CNBC. One of the a hedge funder was talking about why he's in the preferred versus the common shares, because it was priced a lot higher, so it made it not as easy. It's less day tradable. A lot of people don't go directly to the preferreds for trading and such, so it's more of a long-term investment, even though they don't have that. They don't have a dividend yield. I still say get into this. name. I still think it's got a lot of room to grow. I can't imagine when the government goes and finally releases them what it will do. It will probably go easily 12, 13, something like that. So you're looking at $4 of upside in an $8 stock. So it'll take you for a ride most likely. But yeah, they had great earnings. So I mean, I don't see why you wouldn't want to put the capital to work other than thinking that you really don't get paid for anything, no dividends or anything like that, for the success of the company other than the stock price itself. And I think that is something to be said to it, but the momentum it has had has been just phenomenal, as we can see over the 10-day chart. Just a really phenomenal momentum going on here. It hasn't really crossed its 200-day, except for here at the end of October, but other than that, it's been clear above that. Let's go focus in a little bit more. Close below its 50-day. It's coming into a little bit of play with the 200-day, about 5 cents lower. And I'm not too concerned about that as the technical standpoint, but I mean, if there is a down day, I'd say put more to work in the stock. I won't, because it's starting to get into my 25% of total exposure, and I'd make sure I don't have a stock that's more than 25% of my total exposure for my portfolio. So it's going to be a little bit delicate. I may have to do some trimming and some retrading onto it, so I may trim some down once it breaches that 25% exposure. Trim, I don't know, 40, 50 shares off, wait for a pullback, add them back on, so I do lower my cost base. I mean, my cost basis is higher. That way it lowers my exposure a little bit. As you can see, my average cost is $6.25. It's at $8.21. So once my average cost moves up, I'll be able to get a little bit of a less of an exposure on it. I did trade this week. I did get out of Berkshire Hathaway finally. I had about a 30%, like a 45% profit. I held that thing for a long time. I bought into it. Oops, sorry, I'm going onto Twitter. It was just almost like an automatic thing. I got into it when Warren Buffett came out with prostate cancer way back when it went down to 79. I bought like a share because I didn't have a whole lot of money, and I got out at around 144.59 or something like that. It was one share, so I made like $30 over the overall trade, but I mean, it proved to be a good investment. It wasn't really doing a whole lot, and I only had one share, like I said, so I just wanted to free up some capital, so I finally took that off on one of my monstrous days this week. That's why I brought up the Scottrade page. And as you notice, I am showing the amount that I have in my account because I am not afraid to admit that I do not have a whole lot of capital. If you go and see here, on Friday, I did go and beat every market except the NASDAQ. I made 1.15%. I actually had an extremely good week. I had one day when I was up 3%. That was Tuesday with the Michael Kors earnings, and then Fannie Mae going up that day. If I can go and find, is this Tuesday? Yeah, yes, this is Tuesday. It was up a whole lot. And yeah, I had an extremely good day, so on that day I decided, hey, I'm up a whole lot, might as well go and trim a position. And yeah, that's about it. Now, to close off this video, I would like to go and give a shout out to all the members of the Leaders Investment Club. We did get a Business Insider's article published on Friday called the 20 Under 20. I advise everyone to go check it out. Go see some of my other members. Some great people are in there. Millen, who's FX guy, Buena, and FX guy. Julian, he's one of the co-founders of the club. Austin, another co-founder of the club, Ben, who does videos himself. He's a technical analysis guy. He's awesome. I will have that link to the actual article in the description of this video. So I do advise everyone for checking it out. Everyone I would like to thank for following me on Twitter or reading and watching all my videos, and to any new people who are watching this because of the Business Insider's article, thank you. I will see everyone next week.